Welcome to another episode of TechEyeSpy, where we dissect the future of technology one company at a time. If you're new here, a very warm welcome. If you're returning, we're glad to have you back. Before we dive in, please don't forget to hit subscribe, drop a comment if you've got insights to share, and consider exploring our growing series of tech investing books available exclusively on Kindle. They go far beyond these podcasts and offer a panoramic view of the tech sector for those serious about long-term investing. Now, let's get into it. Today, we're exploring a name that comes up often when quantum computing is mentioned, yet remains oddly under the radar in the broader public mind: DWave. That's D-Wave, if you're searching for their ticker symbol. This Canadian-based quantum computing company has been around for longer than most of its rivals and has carved out a niche that defies the typical race-to-universal gate model narrative you hear from other players like IBM, Google, or Rigetti. DWave doesn't chase quantum supremacy in the way others do. Instead, they've opted for a completely different type of quantum computer. One that leans on annealing rather than the gate-based logic most people think of when they imagine quantum processors. So why should anyone care about that? Why would a customer, especially one in finance, logistics, or government, consider using something as exotic as a quantum annealer? Because annealing, despite being more specialized and less versatile than gate-based machines, can solve certain optimization problems in ways that classical computers struggle with. Imagine trying to find the most efficient route across 50 delivery destinations while factoring in traffic, vehicle capacity, and drop-off times. That's a classic optimization headache. It explodes in complexity as the variables rise. DWave's quantum annealing approach can attack these problems more efficiently, not by brute force, but by leveraging the weirdness of quantum tunneling. It searches for global minima across vast landscapes of possibilities in ways classical machines just can't replicate. Over the years, DWave has released several iterations of their systems, most recently the Advantage 2 platform. The hardware now offers over 5,000 qubits, and is being integrated through cloud access rather than sold outright. Customers don't need a cryogenic lab or a team of quantum physicists on hand. They can log in and start testing algorithms through DWave's Leap platform. The company has made it relatively painless to explore quantum capabilities without committing to a full quantum transition, which for many businesses is still a bridge too far. In a world hungry for computing power, especially in the realm of real-time decision-making and high-dimensional modeling, DWave's tools aren't some futuristic toy. They're already being tested in industries like manufacturing, traffic optimization, pharmaceuticals, and even national security. Their value lies not in replacing existing systems, but in augmenting them, adding a new layer of capability where conventional computers start to choke. For investors, the appeal lies in the uniqueness of DWave's approach. It's a bet not on quantum generalism, but on quantum specialization. This is a company that has real paying customers, live products, and a roadmap that acknowledges its constraints while building upon its strengths. It's not about hype. It's about utility. In this episode, we'll break down the strengths that set DWave apart, the weaknesses that continue to cloud its future, the opportunities it's poised to exploit, and the threats that could unravel its vision. By the end, you'll have a clearer picture of whether DWave is a pioneer with lasting relevance or a niche player in a field moving rapidly away from its chosen path. Now, let's take a closer look at what they're doing well. DWave's strengths begin with its longevity, which in the world of quantum computing is no small feat. While most quantum companies are still in their adolescence, DWave is already a veteran. Founded in 1999, It has had the time to evolve from pure research into real-world deployment. That time advantage has allowed it to build something many of its rivals still lack: a commercially available quantum product, and not just one. DWave has gone through multiple hardware generations, starting from the 128-qubit Rainier system to the current Advantage 2, which now boasts over 5,000 qubits. That's a level of iteration most competitors haven't matched yet. While others remain in research labs or early pilot programs, DWave is selling access to actual quantum machines, not theoretical ones. What makes their systems stand out even more is the way they've pursued quantum annealing, a method specifically tailored for optimization problems. It's not universal computing. It's not about simulating molecules or running Shor's algorithm to break encryption. It's about real business problems like scheduling, routing, logistics, and machine learning, the kinds of headaches that bog down decision makers every day. DWave's quantum annealers are purpose-built to minimize complex cost functions over a vast configuration space. To put it more plainly, they help find the best solution from trillions of options faster and more efficiently than classical brute force could ever hope to achieve. They've also figured out how to democratize access. Through their Leap Cloud platform, users don't need to buy a cryostat or hire a quantum PhD. They can access DWave's quantum machines through the cloud, build hybrid workflows using classical and quantum code together, and test out real-world use cases. This has led to meaningful commercial relationships. Volkswagen used DWave systems to optimize traffic flow in Beijing. Denso explored factory floor optimization. Save On Foods, a Canadian grocer, examined quantum-assisted inventory scheduling. These aren't science projects. They're use cases with genuine bottom-line implications. Another key strength lies in DWave's hybrid computing model. Rather than pitching quantum as a silver bullet, they've taken a more grounded approach. Their software development kit encourages blending classical pre-processing with quantum annealing. This sidesteps the limitations of today's noisy quantum systems by letting each side, classical and quantum, do what it's best at. Their Ocean SDK, open source and constantly updated, provides a realistic bridge between developer tools and quantum execution, allowing conventional software engineers to write quantum-ready code without starting from scratch. DWave's recent foray into gate-based quantum computing might seem contradictory to their core identity, but it actually reflects strategic foresight. They've committed to developing a superconducting gate model architecture alongside their annealers. This doesn't mean they're abandoning their roots. Instead, they're recognizing that the market is heading toward hybrid models. By building both types of quantum hardware, DWave could become the only company to offer a full-spectrum quantum toolkit, annealing for optimization, gates for simulation, and algorithms. Finally, DWave holds an immense patent portfolio. Over 200 issued patents and hundreds more pending give them a strong defensive moat. That's not just legal insulation. It's a marker of sustained technical creativity. The portfolio covers everything from chip design and flux qubit architecture to control systems and annealing methods. For a company that lives at the bleeding edge of computation, owning the intellectual scaffolding behind it is a formidable advantage. So when people dismiss DWave as being off the mainstream quantum path, what they're often missing is how strategically that path has been chosen. While others chase universal computing in a race that might take another decade to bear commercial fruit, DWave has opted to serve business customers now, delivering quantum-enhanced solutions where classical methods are already showing strain. Whether that long-term bet will hold is another matter, but in terms of present-day strength, DWave offers a rare thing in the quantum world, not just ambition, but working systems backed by real customers and actual use cases. And that's something every investor, engineer, and strategist should take very seriously. For all of DWave's strengths, there is a long shadow cast by the limitations of their chosen approach. The most obvious weakness, and the one that critics are quickest to mention, is the fact that their quantum annealers are highly specialized tools, excellent for optimization, but unable to run the kinds of quantum algorithms that underpin broader ambitions in quantum chemistry, cryptography, or complex simulation. You can't use them for Shor's algorithm. You can't meaningfully explore quantum advantage in most general-purpose computing tasks. That means DWave's machines, while commercially available, are not fully quantum in the same way that gate-based machines are trying to be. It's a little like comparing a race car to an all-terrain vehicle. Fast, effective, but only on a certain kind of track. Another issue is the growing perception that quantum annealing is being left behind. The rest of the quantum sector, from IBM and Google to startups like Quantinuum and PsiQuantum, are doubling down on gate-based models which promise universality. As those systems improve in fidelity and error correction, their potential outpaces what annealing can offer. In that context, DWave begins to look like a side path, not a leader, but a specialist with an increasingly narrow remit. This perception alone, whether fair or not, can weigh heavily on investor confidence and long-term valuation. Then there's the issue of verification. One of the biggest challenges in quantum computing today is proving that quantum speedup actually exists and that it delivers consistent, repeatable advantages over classical methods. For DWave, this has always been a thorny problem. They've demonstrated solutions faster than classical alternatives in some tests, but these claims are often disputed or diminished by follow-up studies. In many cases, classical algorithms have been optimized post hoc to catch up, or researchers have shown that the quantum advantage disappears when conditions change slightly. That's a tough space to defend, especially when you're selling the promise of faster, smarter computation. DWave has also faced challenges on the business side. The company went public through a SPAC merger, which gave them an influx of capital but also exposed them to the volatility and skepticism that plague many SPAC-born ventures. The share price has struggled to gain upward momentum, and the company has yet to reach profitability. Even though it has real customers, many of those customers are still in the testing or pilot phase, not scaling into large commercial contracts. It's one thing to have a headline client, quite another to turn that into sustained revenue. Another practical concern is the operating environment. DWave's machines, like other quantum computers, require cryogenic conditions to function. That means superconducting qubits need to be kept just fractions of a degree above absolute zero. While users don't need to install hardware themselves thanks to cloud access, the underlying infrastructure remains costly and complex. It limits scale and locks the company into very high operating expenses, even as they try to broaden access. And then there's the question of talent and competition. While DWave was once one of the only names in quantum computing, the field has exploded. Top researchers now have many options, and quantum-savvy customers have more platforms to experiment with. DWave must compete not only on technology, but on perception, prestige, and developer mindshare. The company is not the darling of academia. Its reputation has often been polarizing. And as gate-based systems improve, the technical allure of annealing may not be enough to keep the brightest minds interested in the long term. In short, DWave's biggest weakness may be that it solved a niche problem early, but now faces a broader industry that is racing toward a more flexible, more powerful, and more universally applicable solution. While the company remains unique, it risks becoming isolated, a pioneer left behind by the path it helped to blaze. That doesn't mean it's finished, but it does mean the clock is ticking and the window to scale, pivot, or prove unambiguous superiority is narrowing. Investors would do well to ask whether DWave's platform is a stepping stone or a stranded island. Despite its challenges, DWave stands on the cusp of a surprisingly rich set of opportunities if it can time its pivots and partnerships correctly. The most immediate and practical opportunity lies in the expanding appetite for hybrid quantum solutions. Across industries, the understanding is growing that pure quantum isn't coming tomorrow, but quantum-augmented workflows are already viable. Companies are increasingly open to incorporating quantum processors as part of a broader toolchain, particularly in areas like optimization, machine learning, and AI pre-processing. DWave's hybrid architecture, which blends classical computation with quantum annealing, is already designed for this moment. As more enterprises experiment with these integrated models, DWave's systems could become a go-to resource, not because they replace everything, but because they quietly improve the most stubborn computational bottlenecks. Then there's the enterprise software angle. Most of the current discussion around quantum focuses on hardware, but the software layer, the middleware, developer tools, and integration frameworks is where real user value is often unlocked. DWave's Ocean SDK and its developer ecosystem could become far more valuable than the qubits themselves. As demand grows for domain-specific quantum applications, DWave could license or white-label its software stack, embedding quantum capability into logistics platforms, fintech solutions, or supply chain management tools, without requiring end users to ever know what a qubit island. It's the same playbook that cloud computing followed a decade ago: move the complexity into the back end and let customers enjoy seamless outcomes. The emerging AI sector is another promising frontier. As AI models become larger, more energy intensive, and more reliant on optimization tasks like hyperparameter tuning or architecture search, there's a growing strain on classical computing resources. Quantum annealing is well suited to some of these problems. DWave could position itself not as a rival to AI, but as an enhancer of it, helping optimize neural networks, compress training cycles, or discover better model configurations with fewer training runs. If it can prove even modest gains in training efficiency or model quality, the value proposition for enterprise AI teams could be enormous. In terms of sector applications, energy grid optimization, climate modeling, and materials discovery remain wide-open fields. The global shift toward decarbonization has created a surge in modeling needs, from predicting energy demand and load balancing to optimizing wind farm layouts or battery usage patterns. Classical models struggle with the combinatorial complexity of these systems. Quantum annealers, tailored for such challenges, could be integrated into the national infrastructure strategies of forward-thinking governance. In a world increasingly defined by energy constraints and climate adaptation, any tool that can squeeze out better efficiency becomes mission-critical. If DWave can form the right alliances with infrastructure providers, energy firms, or public sector agencies, it could carve out a durable, high-value niche. There's also a long-term strategic opportunity in global deployment. Most major quantum initiatives are dominated by US or Chinese firms. As a Canadian company with an international user base and a relatively neutral political profile, DWave is well positioned to expand into Europe, the Middle East, Southeast Asia, and parts of South America, where the appetite for quantum capability is rising, but the geopolitical ties are complicated. D. Wave's cloud-first model means it doesn't need to ship massive cryogenic hardware to every customer. It just needs to offer access and support. That's a scalable, lower-risk entry into global enterprise and government contracts. And finally, perhaps the most daring opportunity of all is in redefining its own image. For years, DWave was seen as the outsider in quantum, the one doing it differently. But that difference can now be reframed, not as a deviation, but as a mature, commercially ready layer of the quantum stack. While others chase the grand prize of universal gate-based quantum computing, DWave could own the intermediate space, delivering results now, not in 5 or 10 years. If it can build partnerships with major cloud providers, integrate with enterprise software stacks, and publish irrefutable evidence of quantum advantage in practical cases, it could regain narrative control. There's room in the future of computing for more than one model. The real opportunity for DWave may lie in embracing that fact, not fighting it. If it can position itself as the dependable quantum workhorse, stable, scalable, and commercially useful, then it doesn't have to win the race. It just has to be the one delivering real value while the rest of the field is still getting ready. The threats facing DWave in 2025 are not just numerous, they're existential. This isn't a case of a few hurdles. These are the kind of structural challenges that can define the trajectory of an entire company, especially one operating in a field as volatile and capital-hungry as quantum computing. The first and most immediate threat is technological irrelevance. While DWave has made a name for itself by focusing on quantum annealing, the momentum across the broader industry has shifted almost entirely toward universal gate-based quantum computing. This is not just a trend. It is a consolidation of vision, money, and scientific effort. Government funding, academic research, and enterprise partnerships are overwhelmingly aligned toward gate-based platforms, with the promise of broader algorithmic flexibility, error correction, and long-term scalability. If gate-based systems reach true utility, or even a partial but compelling advantage in real-world use cases, then annealing could be swept aside as a temporary workaround from an earlier era. That would leave DWave with a product that solves a problem fewer and fewer people are interested in solving. Another threat is reputational fatigue. DWave has long carried the burden of being the quantum company that cried wolf, the one that made bold promises before quantum readiness became fashionable. For years, its claims of quantum speed-up were challenged or walked back. While DWave has matured since then, and its systems are more robust and transparent today, the early damage lingers. Investors, journalists, and even developers often treat the company with cautious skepticism. That creates a dangerous feedback loop. If the narrative around DWave remains stuck in the past, then no amount of technical improvement will be enough to reverse public and institutional indifference. There's also the brutal economics of scale. Quantum hardware, especially superconducting systems, is profoundly expensive to build, test, and operate. Even with cloud-based delivery, the back-end infrastructure is capital-intensive and slow to iterate. As DWave attempts to keep pace with rivals that have vastly deeper pockets like Google, IBM, and Amazon, it runs the risk of being financially outgunned. These giants can afford to pour billions into R&D, deploy loss-leading cloud services, and absorb the slow pace of commercialization. DWave, with its post-SPAC balance sheet and ongoing losses, does not have the same room to maneuver. A few quarters of missed targets or the loss of key contracts could force painful restructuring. Competition is also becoming more direct. While DWave once had Annealing to itself, other companies are beginning to explore specialized quantum systems for optimization. Gate-based players are adapting their systems to run certain Annealing-like routines. Even classical firms are leveraging hardware accelerators and next-generation heuristics that mimic quantum behaviors. If those approaches start performing as well or better, and at a lower cost or higher flexibility, DWave's moat disappears. In a market where proof of advantage is already elusive, the entry of quantum-inspired classical alternatives is a serious concern. Security is another subtle but significant threat. As quantum computing becomes entwined with national strategic interests, countries will become more cautious about where their quantum data flows. DWave, being a Canadian company operating cloud-based systems, may find itself on the wrong side of geopolitical firewalls, particularly in a world increasingly fractured along technological borders. Access to markets in China, India, or parts of the EU could be blocked or restricted. Domestic US clients, particularly those in defense, may also prefer to deal with American firms for reasons of procurement preference and security clearance. Talent drain is another slow burn risk. The best minds in quantum computing have options. DWave's model is no longer seen as the bleeding edge. If top engineers and theorists drift toward companies working on quantum error correction, scalable gate architectures, or exotic new qubit types, then DWave's ability to stay competitive will erode from the inside out. Innovation is not just about patents and budgets. It's about people. And right now, the gravitational pull is strongest where the big breakthroughs are expected to happen. Finally, there is the fundamental risk of timing. Quantum computing is still an immature market. The danger for any early mover, especially one not aligned with the dominant architecture, is that they arrive too early and run out of capital before the market matures. DWave might find itself in that exact position, ahead of its time, but not positioned across the finish line. If customers don't scale their use cases, if investors lose interest, or if competitors deliver better results faster, then it may not matter how correct DWave's original vision was. The market will have moved on. In a landscape as fluid and unforgiving as quantum computing, survival isn't guaranteed by being first. It's earned by being relevant at the right moment, to the right people, with the right tools. DWave still has its shot, but the window is narrowing, and the risks are real. And that brings us to the end of our deep dive into DWave, a company that dares to be different in a field obsessed with convergence. Whether you see it as a visionary force quietly solving real-world problems, or a maverick at risk of being left behind, one thing's certain: DWave makes the quantum story more interesting. It reminds us that progress isn't always linear, that specialization can be a superpower, and that sometimes the dark horse knows a different race is being run. If you found value in this episode, if it sparked a thought or challenged a belief, then do us one small favor: subscribe to TechEyeSpy. Your support helps us keep peeling back the layers on companies that others skim over. And while you're at it, take a moment to browse our growing catalog of TechEyeSpy investment books, exclusively available on Amazon Kindle. Each title is crafted with the same obsessive detail you've heard today, covering everything from quantum computing and death tech to fintech, fertility, and beyond. These books are built to make you smarter, faster, and more confident as an investor. No hype, no fluff. Just signal. We're not a hype machine. We're a signal flare in the noise. And if you're here at the beginning listening while we're still building this out, then thank you. You're part of something. We don't just want to cover tech. We want to change how people think about it. So if you've got that one friend who's curious but skeptical, Send this episode their way. Post it, quote it, challenge it, remix it. That's how new ideas spread. Until next time, keep watching the frontier. This is TechEyeSpy, where the future isn't a headline. It's a company you can invest in. Thanks for listening.